Okay, good morning, everyone. Looking at the US stock market, the Dow has again recovered from the 24,000 psychological level. Since then, it has much higher, forming the higher high and also the higher low formation towards the recent peak, which is around the 26,000 ARO points. After touching the 26,000 ARO points level, we did see some of the mild weakness on the Dow Jones as the Dow has pulled back for the next three consecutive trading days. And on yesterday itself, we did see some of the mild recovery on the Dow Jones. The recovery was spurred by the strong uh, second quarter GDP data that expanded about 4.2% in second quarter 2018. This is the fastest expansion since third quarter 2014. So moving forward, we expect this could be the short-term breakout from the EMA 20, a pullback, and a potential continuation pattern for the Dow Jones back towards to retest the 26,000 ARO points or even towards a new high of 27,000 psychological level. In the meantime, the 26,000 will serve as the immediate support level for now. Similarly, on the S&P 500, the S&P 500 has earlier recovered from the 2700 psychological level. Since then, it has been forming the higher high and also the higher low formations being supported along the EMA 20 level on the S&P 500 towards the recent peak of around the 2940. After hitting the 2940, we are seeing some of the mild pullback on the S&P 500 back towards just the EMA 20 level again, and you recovered from the 2900 psychological level. So for now, we expect the S&P 500 to trend back towards the 2940. Until we can see a breakout above that, only we can confirm for further upside on the S&P 500 towards the 2950, with your support located towards the 2900. If the 2900 level were to give way, further pullback will be seen for the S&P 500 towards the 2870 level. Okay, some of this on the crude prices. The crude prices has continues to trend higher following the recovery on top of the 64 US dollars barrel mark. Since then, the crude prices has experienced the breakout above the 70. It managed to breach and also close above the 70, and the follow through by interest was noted on the crude prices. So, following the breakout above the 70, we could expect for the upside for the crude prices back to trend back towards the 75. That will be the immediate resistance for now, with your support located towards the 67, followed by the 64 US dollars barrel mark. Following the breakout above the 70, we are also seeing the uptrend in that orientation formation was being re-established. The MA 20, 60, and 120 has been in line over the past 1 to 2 weeks trading period. Okay, some updates on our local front. The FMKLCI has again formed the W-shaped formation or the double bottom formation breakout above the 1700. Since then, the key index continues to march higher towards the 1830 level. After hitting the recent peak of around the 1830 level, we are seeing some of the healthy pullback on the FMKLCI as the key index has pulled back just towards the EMA 120 level and subsequently traded on a sideways manner along the 1800. So for now, on the FMKLCI wise, we could expect the key index to linger between the 1770 towards the 1830 level over the short-term period until we can see a breakout above the 1830. Only we can confirm for further recovery on the FMKLCI towards the next resistance, which is located towards the 1860 or even back towards the 1890 or 1900 psychological level. But for now, we could expect just a sideways movement on the FMKLCI in view of the lack of catalyst on the local stock market. On the lower liners wise, the FM small cap index has earlier on recovered from the 13,400 points level. Since then, we did see some of the rotational play has sent the FM small cap index back towards the EMA 20. After recovering back above the EMA 20 level, however, we are seeing some of the mild weakness on the FM small cap index on yesterday as price formed some of the bearish candle. So for now, we could expect some of the mild profit-taking activities following a sharp 2 weeks gains. Any pullback for now will be a healthy pullback for investors to digest their recent gains before the next recovery rate to resume towards the 14,500 points level on the FBS Small Cap Index. Although the MACD indicator has continued to forming the high pointings are higher, we are seeing the RSI has tripped below the 50 level yesterday. On Salutica, price has formed the bullish divergence signal as price has been trading lower, but the MACD indicator has been forming the higher low formation towards the recent low of around the 45.5 cents level. After touching the 45.5 cents level, we are seeing a good recovery pattern on Salutica as price has hit and rejected the EMA of 120 level around the intraday high of 67.5 cents. After touching the 67.5 cents, you are seeing price has pulled back and traded on a sideways manner. But the good thing now is that we are seeing a potential short-term breakout accompanied by some of the improvement in volumes. Price traded on a sideways manner back towards just the EMA 20, accompanied by some of the declining in volumes. And once again, price has recovered, forming a bullish candle yesterday, accompanied by some of the improvement in volumes as well. So for now, on Salutica, what we need to do now is we are going to monitor for this trend line breakout, which is above the 61 cents level. Price attempts to breach above the 61 cents level yesterday, but close above that. So for now, let's monitor for the breakout above the 61 cents, for us to target the 67.5 cents, or even towards the 72.5 cents level, 72 cents level on Salutica, with your stop loss point being located towards the 57.5 cents. And if you can take further risk, the final defense will be located below the 52.5 cents level on Salutica. Everything appears to be quite positive on Salutica right now. As you can see that there's no bearish divergence signal at current juncture, implying that the price will likely to trend back towards the 67.5 cents level on Salutica. On Persona, similarly, we did saw a bullish divergence signal was being formed as price has been trading lower, but the MACD indicator throughout this period of time has been trading higher. Subsequently, Persona has staged a strong rally towards the intraday high of 36.5 cents level, accompanied by some of the high volumes being traded. Price subsequently pulled back just towards the EMA 60 level and traded on a sideways manner over the past 2 to 3 weeks trading period. So for Persona, we need to monitor for this breakout above the 32 cents level. It attempts to, it has retested the 32 cents level on several occasions over the past 1 to 2 weeks trading period. So for now, let's monitor for the breakout, given that price has really formed a bullish candle yesterday, accompanied by some of the improvement in volumes. Should price reach above the 32 cents, we could trade Persona towards the first target price of 35 cents, or even towards the 36.5 cents level, with your stop loss point located below the 29.5 cents on Persona. Should price reach above the 32 cents, we could expect the MACD indicator to issue a buy signal, whereas the RSI could be rising back above the 50 level as well. On MMSV, price has again retraced from the recent peak of around the 1 ringgit and 72 cents. The 1 ringgit and 72 cents was also served as the previous resistance level. It did hit the 1 ringgit and 72 cents level back in February. Once again, it hit at 1 ringgit and 72 cents level towards the end of August. Subsequently, price has pulled back and traded a sideways manner over the past 2 to 3 weeks trading period. But for MMSV, right now, we need to monitor for this consolidation breakout above the 1 ringgit and 43 cents level. It attempts to breach above the 143 yesterday, but close above that, accompanied by some of the improvement in volumes. So for now, let's monitor for the breakout for us to trade MMSV towards the first target price at the 1 ringgit and 60 cents, or even towards the 172. Your stop loss point is pegged below the 1 ringgit and 34 cents level on MMSV. Following yesterday's bullish candle as price rose and also closed above the EMA 20 level. We are also seeing the MACD indicator has already issued a buy signal, whereas RSI has risen above the 50 level as well. On our Hexa, price has found some of the bottom along the 65 cents level. Subsequently, price has experienced the consolidation breakout above the 72 cents level yesterday, accompanied by some of the high ones being traded. Following yesterday's breakout above the 72 cents, any pullback for now will be a healthy pullback for us to accumulate around the 72 cents before the next uptrend to resume for us to target towards the 77 cents. That will be the mere target price for now, followed by the 83 cents level. Your stop loss point will be located below the 68 cents level on Hexa. Price is still on a downtrend formation on this counter, so any recovery from now will be just taken as a technical rebound play towards the 77 cents. Last two company for today will be firstly Data Prep. Data Prep has been traded on a sideways manner since May. But the good thing now on Data Prep right now is you are seeing a good trend line breakout recently, or yesterday itself above the 23.5 cents level as price from a bullish candle, accompanied by some of the mild improvement in volumes. So following this trend line breakout above the 23.5 cents, we need to monitor for this sideways or the horizontal line breakout above the 24 cents level. Should price reach above the 24 cents level and close above that, then we could see further upside for Data Prep towards the 28 cents or even towards the 29.5 cents level. Your stop loss point will be located below the 21 cents on Data Prep. Everything appears to be quite positive on Data Prep right now, as you can see that the MACD indicator has been forming the higher high formation and also the higher low formation during this period of time, implying that price is likely to retest back towards the 28 cents level over the short to mid-term trading period. Company for today will be Carex. Carex has staged a sharp recovery from the recent intraday low of 49 cents towards the 94 cents. It rejected the EMA 120 level on once here during the 94 cents, subsequently in here as well on the 23rd of July, and subsequently price has pulled back and traded on a sideways manner. But the good thing on Carex right now is that we are seeing a good trend line breakout recently above the 72 cents a level, accompanied by some of the improvement in volumes being traded on Carex. With the trendline breakout yesterday, we could expect further technical rebound on Carex towards the first target price at the 78 cents or even towards the 85.5 cents level. Your stop loss point on Carex will be located below the 63.5 cents a level. If you have any questions, you can put in the chat box. I'll reply you shortly. Denko has seen the uptrend intact orientation formation being formed since the early of September, following the recent breakout pullback and continuation pattern above the 47.5 cents level. And recently, we are seeing a good short-term breakout pullback and continuation pattern above the EMA 9 level on Denko, as price has hit the recent peak of 55 cents. So for now, on Denko Mac, any pullback will be a healthy pullback for Denko for investors to digest their gains, given that some of the climatic volumes being traded on Denko on yesterday. So for now, any pullback will be a healthy pullback for investors to digest their gains around these 50.5 cents level before the next recovery will resume on Denko towards the next target price will be located towards the 57 cents or even towards the 64.5 cents level over the longer term period. Your stop loss point will be located below the 47 cents level on Denko. So for now, any pullback price will most likely might be on a gap up, and subsequently on an intraday basis, it likely to pull back and subsequently traded lower over the next couple of days. So long as price did not pull back with some of the high volumes, then it's still quite safe to hold on to Denko. Genting Warren has been on a downtrend of formation since the pullback below the 1 ringgit and 30 cents a level. The MA9 is below the 20, below 60, and below the 120 level. And subsequently, price continues to reject the EMA 60 level and forming the lower low and also the lower high formation. So for Genting Warren, uh, price will any recovery from now will be just capped towards the 30 cents a level. And if you still want to hold on to this a counter at a pullback below the 10 cents, then you have to cut loss on this company immediately. While any recovery from now will be just capped towards just the immediate target price will be located towards the 20.5 cents towards the 30 cents level. Before that, let's look at the mother share to see how her price move. Okay, the mother share is also on a downtrend of formation. The MA9 20, 60, and 120 has been is on a downtrend formation. So for Genting, if you're holding on to Genting Warren, you have to monitor for the mother shares movement. If price were to violate below the 7 ringgit and 85 cents level, then you have to cut loss immediately. While any recovery from for Genting towards the 8 ringgit and 6 cents, then you could see the warrant recover towards a certain level. That will be your immediate target price for now. Hibiscus, earlier we did mention that price is on the uptrend interpretation formation, forming the higher high and also the higher low formation. It did form the breakout pullback, just one day pullback, and the continuation pattern was being established. So for it did breach above the 1 ringgit and 17 cents level recently as well. So for Hibiscus, we could expect further recovery for Hibiscus towards the first target price at the 1 ringgit and 39 or 1 ringgit and 40 cents level. That will be the immediate target price for now. Or we can use the daily EMA9, which is currently located at the 1 ringgit and 13 cents level as your trailing stop loss point. All in all, our price is still forming the higher high and also the higher low formation. There's no sign of reversal at current juncture. For Rich Energy, similarly, we are seeing the higher high and also the higher low formation recently. Price has hit our target price of 38 cents level recently. So price is likely to trend back to retest the 48.5 cents. That will be the immediate target price for now, followed by the 51 cents. Well, you can use the daily EMA9, which is currently located at the 41 cents as your trading stop loss point. Earlier, we did see price rally. It pulled back just towards the EMA9, rally again. It pulled back just towards the EMA9 and continue to rally. So the EMA9 will serve as your trading stop loss point for now, or trading profit. If there's no further question, then we end the morning briefing for today. Thank you.